Welcome to The Explainer. Today, we're unpacking a really massive strategic acquisition that highlights one of the absolute biggest macro trends happening in global finance right now. We're talking about the aggressive, ongoing consolidation of the healthcare sector. Post-pandemic, institutional capital has just been hunting for these resilient, high-growth assets, and private equity has clearly zeroed in on regional healthcare networks as the ultimate prize. So today, we're breaking down the anatomy of a specific deal that just perfectly illustrates this whole trend. We're looking at global investment firm KKR's latest landmark healthcare move. Consider this your deep dive into the strategy, the valuation metrics, and the broader market implications of this absolute game-changer of an acquisition. Okay, let's dive right into this. 1,750. Now, in the world of high-stakes institutional finance, a number this specific isn't just a random figure thrown out there, right? It represents a highly calculated valuation. We're currently witnessing just a massive influx of capital pouring into emerging healthcare markets, and precise valuations like this are the result of rigorous, deep analysis of cash flows, operational efficiency, and long-term growth potential. When a massive private equity fund deploys capital at this scale, trust me, they aren't guessing. They've modeled out exactly how they're going to scale the target asset, professionalize the management, and ultimately secure a seriously lucrative exit down the line. So this number is really the foundation of our analysis today, and it represents a massive bet on the future of regional medical infrastructure.
Section 1, the landmark announcement. To really grasp the scale of this transaction, we have to look at the strategic pairing of the two heavyweights involved here. On the left side, we have KKR. Now, they're a global titan in private equity, completely famous for their massive capital reserves and aggressive operational playbooks. And on the right side is the target entity, Baby Memorial Hospital, or BMH. Now, to the uninitiated, that might just sound like a local medical facility, but BMH is actually a premier multi-specialty hospital chain based in Kerala, India. They were founded back in the late 1980s, and they've organically grown into a total regional powerhouse, boasting thousands of beds across key cities like Kozhikode and Kannur. So you might be wondering, why does a global giant like KKR want a footprint in this specific regional market? Well, it all comes down to demographics and economics. Kerala boasts a really rapidly rising middle class, exceptionally high health insurance penetration, and a growing aging population that is actively demanding complex, high-quality tertiary care. So for KKR, BMH isn't just a hospital, it's a highly lucrative, scalable platform that is perfectly positioned in an insanely high-demand market.
Our source material explicitly calls this transaction a landmark investment, and that specific terminology points directly to the actual mechanics of the deal. Look, this is not just some passive stock purchase where they sit back and wait. This is a major growth equity injection. When a firm like KKR makes a landmark investment into a regional hospital network, they are bringing so much more than just cash to the table. They're funding aggressive capacity expansion. Strategically, this means professionalizing the board of directors, bringing in top-tier operational management, and handing the founders the capital required to build out entirely new, state-of-the-art medical infrastructure. And honestly, this kind of investment usually paves the way for what we call inorganic growth, meaning KKR is very likely going to use BMH as their primary vehicle to just buy out smaller competing hospitals in the surrounding districts, rolling them up to create a dominant, consolidated healthcare network under one unified brand. Moving right along to Section 2, breaking down the numbers. So how do these private equity firms actually evaluate the final scale of a healthcare investment like this? It's a highly specialized process, you guys. You really have to look far beyond just the real estate footprint or the brand name on the building. Institutional investors evaluate hospital networks based on total bed capacity, daily occupancy rates, and crucially, this one major metric known as ARPOB. That stands for Average Revenue Per Occupied Bed. So a hospital facility that just focuses on basic outpatient care, that's going to have a lower ARPOB. While a facility equipped for highly specialized tertiary care, we're talking advanced robotics, complex cardiology, surgical oncology, that commands a drastically higher ARPOB. The sheer scale of KKR's investment here is basically reverse engineered directly from BMH's ability to maximize that specific metric over the next 5 to 7 years. They're investing super heavily today because they see a crystal clear pathway to dramatically increasing the revenue generated by every single bed in that network.
Which brings us to the definitive valuation, 1,750 crore rupees. To put that into a global perspective for us, we're talking about roughly $210 million being injected straight into a regional Indian hospital chain. That is huge. This massive capital deployment is strictly earmarked for aggressive strategic growth. In the healthcare sector, when you see capital of this magnitude, it's utilized to expand those exact high-margin specialties we just discussed. You can absolutely expect to see BMH rapidly build out dedicated cutting-edge oncology wings and advanced neurosciences departments. Furthermore, an injection of 1,750 crores allows a hospital to establish a really dominant hub-and-spoke model. Basically, BMH serves as the central, high-tech tertiary hub, right? While that newly acquired capital is used to purchase smaller Tier 2 city clinics that act as the spokes. Those spokes automatically feed the complex, high-revenue medical cases directly into the main hospital system. It's an incredibly efficient growth engine.
All right, let's wrap this up with Section 3, the big takeaway.
The big headline fact here is that KKR has invested a massive 1,750 crore rupees into Baby Memorial Hospital, but honestly, the true takeaway is what this means for the broader market. We are literally watching the corporatization of regional healthcare happen in real time. This move aggressively positions KKR against rival private equity megafunds, think Blackstone, TPG, Temasek, all of whom have been actively racing to roll up healthcare assets across India. We actually just saw this recently with the massive consolidations involving Manipal hospitals and care hospitals. The era of the fragmented, independent, family-run regional hospital, it's rapidly coming to an end. It's giving way to these institutional, scaled corporate networks that actually have the deep financial backing to afford cutting-edge medical technology and attract the absolute top-tier surgical talent. KKR's investment is just a powerful confirmation that the battleground for healthcare dominance has officially shifted from major metropolitan hubs straight into these high-growth regional centers.
And this leaves us with a really critical view of the future. What does a 1,750 crore rupee landmark move truly signal for private equity in healthcare? It really begs the question, are standalone regional hospitals now going to require global financial backing simply to survive the exponentially rising costs of medical technology and talent acquisition? And looking specifically at KKR, is this BMH acquisition just the strategic beachhead for a much larger roll-up strategy across the entire South Asian medical market? I'd highly recommend keeping a very close eye on how BMH deploys this capital over the next 4 quarters. Their expansion strategy isn't just going to impact local healthcare delivery, it's very likely going to serve as the definitive blueprint for how global private equity operates in emerging medical markets moving forward. Thank you so much for joining me for this explainer, and I'll catch you on the next one.